Good evening, sir. My name is Praveen. Today I'm going to discussing about accounting for taxes, and I take a best example for a mining industry. In mining industry, Newcrest Mining Limited company. I'll take this company for a best example. Coming to the topic, Newcrest Mining Limited company is very popular company in Australian country, only particularly in Australian country, and it's also very popular in Papua New Guinea, Ivory Coast, Philippines, and some other small scale industries based countries. And it was established for a American subsidiary company. Actually, the company's origin is in 1922, but for a American company is changed and undertaken this Newcrest company in 1966, sorry, and it was listed in Australian Stock Exchange in 1987. Coming to the topic, Newcrest Mining Company is basically operates for gold mining, not coal or not other things. It's very popular for gold mining, and this is the largest gold mining company in Australia, and it produces 25 million ounce of gold in a year. For example, this 25 million ounce is last year 2019 production, and it almost equals to 804 million US dollars. It's very big company. It's also delivered 47.7% of returns to shareholders of the company, and the company earns 924 million dollars before 2019, before tax in 2019. And coming to some basic concepts, my company is Newcrest company, and coming to the topic, basic concepts: accounting profit, taxable profits, temporary difference. In general, accounting profit means accounting profit. Either it is net profit or net loss, whatever is recorded in the financial statements of the company. Here, financial statements of the company means profit and loss account. Whatever the amount, either profit or loss we get in profit and loss account, is called accounting profit. And this is the real net profit declared by the company in its book of accounts. And next, taxable profit. It's very easy. Accounting profits means the profit or loss whichever we show in the financial statements of the company is accounting profit. Taxable profit means after income tax and everything paid, the additional accounting profit. That means after deducting the tax, after deducting the insurance, everything, whatever the amount you have to pay for tax is called taxable profit. Next, temporary difference. As discussed earlier, there is a difference between taxable income and accounting income. Calculation same involves two different stages. So temporary difference is also known as timing difference. And coming to recognition criteria of deferred tax assets and deferred tax liabilities, both are different. And when a taxable income is higher, so when a taxable income is higher than the accounting income in a particular year, for example in 2019 your taxable income is $100 million and accounting income is, for example, say $120 million. So in a particular year your taxable income is higher than the accounting income, the company assure with reasonable certainty that the company is able to earn through the future 2 years. So based on this accounting and taxable income, the company predicts the next 2 years or 3 years income and recorded its current assets status in the financial statement accounts. And in case of a liability, the financial statements, the concept of prudence is used where the company should be prudent towards the recognition of a liability to safeguard the interest of stakeholders and prepare the company in advance for future expenses and make previous for the same. Next, tax expense. So based on these basic concepts, I'll adopt these basic concepts to my company, Newcrest Mining Limited. Tax expense. Newcrest Mining Limited, it's reflected US $272 million of amount total income tax expenses, which include 253 million as the current income tax expense in $19 as the amount of tax expense relating to deferred tax for the year 30th June 2019. In the current year, it's $2 million for the income tax related to prior periods. I'll provide the source also. Newcrest Mining Limited is a consolidated financial performance reflected $118 million US dollars as the amount of total income, which include 168 millions in the current year. And differences. Reporting of deferred tax liabilities. The less payment of tax in the current year leads to creation of deferred tax liability, and the same is carry forward till the time it is adjusted in future years. The consolidated balance sheet include in the annual report deferred tax liability, say for example US $90 million, which was actually $100 million at the end of the previous year. So it is adjusted. The previous year's adjusted deferred tax liability is adjusted in present year. So the deferred tax liability was formed due to the contribution of temporary difference of the property, plant, equipment, contribution of different aspects from past year to present year. And for example, for this Newcrest Mining Limited company, in 2018, this company recorded $1,222 million equipment, plant, whatever the assets, and a provision was created about 49 million US dollars, and the difference created $86 million. Comparison between income tax payable and income tax expense. Payable and expense. For example, if you take consolidated balance sheet, the current tax liabilities in 2019 for Newcrest Mining Limited company is $176 million, and the same is used 99 million US dollars in previous year. So income tax payable, income tax expense. The above amounts, whatever the amounts I said, 176 million and 99 million dollars, represents the amount of income tax that is outstanding in the books of accounts of the company for 2019. I mean, generally here we pay 30th June of every year we pay taxes. So in the consolidated financial statements, Newcrest Mining Limited current expenses is $272 million, and this is same was 118 million in previous year. So the company almost paid double income tax, and the amount income tax is booked as expense in the present year. So if you want to pay the amount in the next year, it is as expense for this year. The amount of income tax expense is calculated based on accrual concept, which is entire income tax expense is shown in the consolidated income tax statement. And what is temporary difference? I repeated a couple of times, temporary difference. What is temporary difference? Generally, there are two types of differences in accounts: temporary difference and permanent difference. Temporary difference means the amount which is capable of reversal in the future years and can be adjusted against the profit or loss in future year is known as temporary difference. And whereas amount of difference between income on which is levied and accounting income due to the existence of two different laws is in the corporation and income tax law that are not capable of reversal. So if the income is capable of reversal in the future is called temporary difference, and you can't calculate the difference in the future is a permanent difference. And finally, I concluded that the income tax law, taxable income as per the income tax law, and the calculation of accounting profit concludes two different amounts of profits and total revenue and after deduction of the expenses. Both laws have different rules for the accounting profits. There are, for example, Australian accounting standards 112, whereas International Accounting Standard 12. Both depicted this in annual report of a financial statement.